In breaking news today, cryptocurrency exchange giant Coinbase has confirmed that it was the target of a sophisticated cyber attack earlier this week, one that has sent shockwaves across the crypto industry. According to official statements from the company, the attack caused significant disruptions to internal systems, resulting in temporary outages and login issues for thousands of users worldwide. While Coinbase insists that no funds were stolen, cybersecurity analysts warn that the true scale of the breach may not yet be fully understood. Early reports suggest this was not your typical phishing scam. Instead, cybersecurity experts believe it was a high-level, coordinated attack, potentially orchestrated by an international hacking group with significant resources and expertise. Sensitive data, including user information, internal logs, and possibly access credentials, may have been compromised. Coinbase has been working closely with the FBI and independent security firms to investigate the breach and assess the full extent of the damage. The company responded quickly, temporarily disabling affected systems and reinforcing its security protocols. As a precaution, users are being strongly urged to change their passwords, enable two-factor authentication, and monitor their accounts for any suspicious activity. This incident raises serious questions about the security of centralized exchanges and the broader risks facing the crypto ecosystem. While blockchain itself remains highly secure, platforms like Coinbase act as gateways for millions of users, and that makes them prime targets. For many investors, this attack is a wake-up call. It's a reminder that convenience and trust in platforms must always be balanced with personal responsibility and proper security measures. In a space where billions of dollars are traded daily, even the most well-funded companies are not immune to sophisticated threats. Coinbase has stated that it remains fully operational and is committed to maintaining full transparency as the investigation continues. The company has also promised to implement new security upgrades in the coming weeks to prevent further incidents. Meanwhile, users across the crypto space are watching closely. With market volatility already high and investor confidence shaken by recent events, the timing of this attack couldn't be worse. As always, we'll continue to monitor the situation and bring you the latest updates as they develop.
The much-anticipated announcement from Pi Network has failed to meet expectations, triggering a sharp downturn in sentiment and price across its community of investors and traders. Once hailed as one of the most promising mobile-based cryptocurrency projects, Pi Network found itself under intense pressure this week after delivering a major update that many users described as vague, unimpressive, and lacking any significant roadmap clarity. Pi, which is still operating in its so-called enclosed mainnet phase, released details on its plans for transitioning to an open network. However, rather than confirming a definitive launch date or providing technical progress updates, the team shared what many have called overly cautious language, suggesting that the open mainnet could still be months, if not longer, away. The market reaction was swift. PI Coin, which already lacks traditional exchange listings and operates through peer-to-peer markets, saw a sharp decline in trading volume and value. The token, previously trading at speculative highs on over-the-counter platforms, experienced double-digit percentage losses within 24 hours of the announcement. Many early adopters, who spent years mining Pi through its mobile app, are now voicing frustration and concern over the project's prolonged development timeline. Despite years of marketing, a massive user base, and an active online community, critics argue that Pi Network has yet to deliver a functional, tradable cryptocurrency ecosystem. Adding to the uncertainty is the lack of transparency around the project's internal economics. Pi Network still does not operate on public blockchains like Ethereum or Bitcoin, and the codebase remains largely inaccessible for external review. For many analysts, this continues to raise red flags about the project's viability and long-term credibility. However, Pi Network's development team insists that they remain committed to delivering a fully operational platform. They argue that the extended testnet phase is necessary to ensure stability, regulatory compliance, and scalable infrastructure before a full public launch can occur. Still, for users who have been waiting since as early as 2019, patience is wearing thin. Many had hoped that this week's update would mark a clear turning point, a transition into a real, open-market cryptocurrency. Instead, what they received was another delay wrapped in technical language and vague promises. As of now, the project continues to rely on its loyal base to maintain momentum, but without clearer milestones or deliverables, skepticism is likely to grow. We'll continue to follow this story as it develops, especially if Pi Network offers further clarification or progress updates in the weeks ahead. In the fast-moving world of crypto, projects can surge or collapse in a matter of days. And right now, Pi Network appears to be dangerously close to losing the confidence of its community. Stay tuned for more updates as we track what could be a turning point, for better or worse, in the future of Pi Network.
Hey, stop what you're doing! Bitcoin has just soared past $100,000, and there's more to the story. Bitcoin enthusiasts, rejoice! Our favorite cryptocurrency has shattered the $100K barrier once more, marking a historic moment in the crypto world. But that's not all. Former President Donald Trump has announced a groundbreaking trade deal with the United Kingdom. This announcement coincided perfectly with Bitcoin's price surge, sparking a frenzy of excitement and speculation. Adding to the buzz, David Bailey, a key crypto advisor to Trump, is launching a public Bitcoin holding company. This could mean big things for institutional adoption and the mainstream acceptance of Bitcoin. And let's not forget Robert Leshner from Superstate, who's introducing a new product that tokenizes publicly traded shares. This innovation could revolutionize the way we think about investments. So, what do you think? Is this just the beginning for Bitcoin, or are we in for another roller coaster ride? Stay tuned and keep those wallets ready. Bitcoin has done it again. The world's most famous cryptocurrency has surged past the $100,000 mark. This is a major milestone that has many investors celebrating. After a period of relative calm in the crypto world, Bitcoin's price jump is a reminder of its potential for rapid growth. The last time Bitcoin reached these heights was back in 2021. Since then, it has experienced its share of ups and downs. However, this recent surge shows that Bitcoin remains a powerful force in the financial markets. This price jump is a welcome development for long-term Bitcoin believers. It is also attracting new investors who are eager to get in on the action. The question now is whether this upward trend will continue. While Bitcoin is enjoying the spotlight, other cryptocurrencies, known as altcoins, are not having as much fun. Many altcoins have seen their prices decline in recent weeks. This contrasting performance highlights a key trend in the crypto market. Bitcoin, with its longer track record and wider name recognition, is often seen as a safe haven in times of uncertainty. When investors get nervous, they tend to flock to Bitcoin. This can cause a surge in Bitcoin's price while other cryptocurrencies lag behind. This is not to say that all altcoins are struggling. Some, like Ethereum, remain popular and continue to hold their value. However, the overall trend is clear. Bitcoin is currently outshining the competition. One analyst believes that this is just the beginning of a larger cryptocurrency rally. They predict that the entire crypto market, including Bitcoin, will continue to rise throughout the summer. This prediction has generated a lot of buzz in the crypto community. Of course, predicting the future of the crypto market is notoriously difficult. Prices can be volatile and unpredictable. However, there are a few factors that could support a summer rally. Institutional interest in cryptocurrency is growing. More and more companies are investing in Bitcoin and other digital assets. Additionally, regulations around cryptocurrency are becoming clearer in some parts of the world. This increased clarity could encourage more people to dip their toes into the crypto waters. The recent surge in Bitcoin's price is exciting for those invested in the cryptocurrency world. It is a reminder of the potential rewards that cryptocurrencies offer. However, it is also important to remember that with high potential rewards come significant risks. The crypto market is still relatively young and unpredictable. Prices can fluctuate wildly, and there is always the risk of scams and fraud. Before investing any money in cryptocurrency, it is essential to do your research and understand the risks involved. It is also crucial to remember that past performance is not necessarily indicative of future results. Just because Bitcoin has surged past $100,000 does not mean that this upward trend will continue. Investing in cryptocurrency should always be approached with caution and a long-term perspective. Hold on to your hats, folks, because Bitcoin is at it again. Our favorite digital roller coaster has blasted past the $100,000 mark, leaving economists baffled and investors both thrilled and terrified. This latest surge has reignited the debate. Is Bitcoin the future of finance or a bubble about to burst? One thing's for sure, it's been a wild ride and we're only just getting started. Remember when you could buy a pizza with Bitcoin? Those days are long gone, my friend. This latest price surge is more than just a blip on the radar. It signals a potential shift in the global financial landscape. The US dollar, that once mighty titan, is looking a little shaky. Meanwhile, Bitcoin is strutting around like it owns the place, flashing its decentralized smile. Could this be the beginning of the end for traditional currencies? Or is this just another case of Bitcoin getting a little ahead of itself? Of course, no one has a crystal ball except maybe that guy on late-night TV, but he also claims to talk to the dead. The truth is, predicting Bitcoin's next move is like herding cats, messy, unpredictable, and likely to end in frustration. But hey, that's half the fun, right? Buckle up, Buttercup, because things are about to get interesting. Remember that time you lent your friend $2.5 trillion and they just kind of forgot about it? Well, imagine that friend is China, and instead of forgetting, they're seriously considering setting that money on fire. That's essentially the situation the US dollar is facing right now. Asian exporters, sitting on mountains of US dollar reserves, are starting to sweat. See, when the dollar weakens, those trillions of dollars are worth less. And right now, with the Fed poised to slash interest rates like a Black Friday shopper on a sugar rush, the dollar is looking about as stable as a Jenga tower built by a toddler. This avalanche of dollar selling could send shockwaves through the global economy. Think stock market plunges, soaring inflation, and maybe even a run on your local supermarket. Okay, maybe not the supermarket, but you get the idea. So what does this have to do with Bitcoin? Well, some experts believe that as the dollar stumbles, Bitcoin could emerge as a safe haven for investors seeking refuge from the storm. Think of it like this. When the world is on fire, gold tends to look pretty good. And in this digital age, Bitcoin is like gold's cooler, younger sibling. Whether it can actually live up to that hype, well, that's the million-dollar question, or should we say the million-dollar Bitcoin question. Bitcoin, the digital gold, the future of finance, the bubble that will never burst, or will it? Look, we've all heard the hype, the wild predictions, the promises of Lambos and early retirement, but let's be honest, even your grandma who still uses AOL probably has an opinion on Bitcoin these days. It's everywhere and everyone's got an angle. But beneath the hype and headlines, Bitcoin's future remains shrouded in uncertainty. Is it a genuine safe haven asset, a hedge against inflation and government overreach? Or is it just another speculative bubble fueled by FOMO and destined to crash back down to earth? The truth, as always, is probably somewhere in between. One thing is certain, Bitcoin has tapped into a deep well of dissatisfaction with the current financial system. In a world of endless bailouts, quantitative easing, and governments printing money like it's going out of style, Bitcoin's decentralized, finite nature holds a certain appeal. Whether it can truly disrupt the established order, well, that remains to be seen. But one thing's for sure, it's going to be a hell of a show. Hold on to your hats, folks, because things are about to get wild. Bill Miller 4, a name that screams, I know what I'm talking about, predicts Bitcoin will hit a cool $1 million. Not next week, not next year, but eventually. Why? Because he believes Bitcoin will flip gold, surpassing its $20 trillion market cap. That's right, he thinks our favorite digital currency will be worth more than all the shiny stuff we've been digging out of the ground for centuries. Now I know what you're thinking, John, you beautiful, cynical bastard, that sounds insane. And you're not wrong. $1 million Bitcoin seems about as likely as finding a unicorn riding a dragon while eating a cheeseburger. But Miller's argument, while audacious, isn't entirely bonkers. Bitcoin, he argues, is functional gold. It's scarce, divisible, and unlike gold, you don't need a vault to store it. Plus, in a world where governments can print money at will, Bitcoin's fixed supply is appealing. Of course, this all hinges on Bitcoin gaining mainstream acceptance, something that's far from guaranteed. But hey, stranger things have happened. Remember the time a reality TV star became president? Yeah, me neither. Bitcoin is on a roll. The digital currency has been surging in value, recently approaching its all-time high. This surge is not just a blip on the radar, it's a powerful signal. It shows that Bitcoin is gaining mainstream acceptance. This price movement is attracting attention from investors big and small. The recent surge is not just about numbers, it's about a fundamental shift. Bitcoin is transitioning from a niche asset to a major player. This shift is being driven by several key factors. These factors are creating a perfect storm for Bitcoin's growth. This surge is not without its skeptics. Some still see Bitcoin as a bubble. They predict an inevitable crash. However, many experts disagree. They argue that this time is different. This time, the fundamentals are stronger than ever. The recent price action is just the tip of the iceberg. The real story is much bigger. Bitcoin is at the forefront of a global financial revolution. This revolution is changing how we think about money and value. Buckle up because the ride is just beginning. Several factors are fueling Bitcoin's impressive growth. One key factor is regulatory clarity. Wall Street banks now have the green light to custody Bitcoin. They can also offer it to their customers. This regulatory shift is a game changer. It opens the door for widespread institutional adoption. Governments are also getting in on the action. Countries around the world are buying Bitcoin. They are adding it to their national reserves. This trend is being fueled by former US President Donald Trump. Trump has become a vocal Bitcoin advocate. He even declared himself the first crypto president. Institutional investors are pouring money into Bitcoin. This influx of institutional capital is a major vote of confidence. It shows that big players are taking Bitcoin seriously. The launch of Bitcoin ETFs has made it even easier for institutions to invest. ETFs provide a regulated way to gain exposure to Bitcoin. Perhaps the most important factor is Bitcoin's growing utility. More and more people are using Bitcoin for its intended purpose as an internet-native form of money. This increased utility is driving demand and pushing the price higher. Leading figures in the crypto space are bullish on Bitcoin's future. David Marcus, former president of PayPal, believes the bull case for Bitcoin is stronger than ever. He points to the growing institutional adoption and increasing utility as key drivers. Rich Rines, former Coinbase lead, echoes this sentiment. He attributes the surge to macro liquidity trends and institutional adoption. Rines also highlights the improved market infrastructure. This includes regulated ETFs and custody services. These developments make Bitcoin more accessible and secure for institutional investors. These expert opinions underscore the significance of Bitcoin's current trajectory. They suggest that this is not just a speculative bubble, it's a fundamental shift in the financial landscape. Bitcoin's rise is happening against a backdrop of broader economic uncertainty. Fears of inflation and a weakening US dollar are pushing investors towards alternative assets. Bitcoin, with its limited supply and decentralized nature, is seen as a hedge against these risks. Adding to the intrigue, Apple recently made a significant move in the crypto space. While details are still under wraps, this move is seen as a game changer. It signals that major tech companies are taking crypto seriously. This move could have a profound impact on the adoption and use of cryptocurrencies. Bitcoin's price surge is just one piece of a much larger puzzle. The world is changing. The traditional financial system is being challenged. Bitcoin is at the forefront of this change. It's offering a new way of thinking about money and value. The future of finance is being written right now, and Bitcoin is holding the pen. Meta, the parent company of Facebook and Instagram, is once again exploring the potential of stablecoins. This comes after the company's previous attempt to launch its own stablecoin, Diem, failed in 2022. The social media giant is now looking to leverage existing stablecoins to facilitate cheaper and faster cross-border payments for its users. This strategic shift highlights Meta's recognition of the growing importance of digital currencies in the evolving financial landscape. Meta's renewed interest in stablecoins is driven by the desire to provide more accessible and affordable financial services to its global user base. Traditional methods of sending money across borders can be slow, expensive, and cumbersome. Stablecoins, being pegged to stable assets like the US dollar, offer a more efficient and cost-effective alternative. By integrating stablecoins into its platform, Meta aims to empower users, particularly creators and businesses, with seamless and low-cost payment options. Meta's exploration of stablecoins is still in its early stages. The company is not looking to create its own stablecoin this time. Instead, Meta is engaging in discussions with various cryptocurrency firms to explore potential partnerships. This collaborative approach reflects Meta's intent to leverage the expertise and infrastructure of established players in the stablecoin ecosystem. One of the primary motivations behind Meta's renewed interest in stablecoins is the potential to significantly reduce the cost of cross-border payments. Traditional remittance methods often involve high fees, cutting into the earnings of individuals and businesses who rely on international transfers. By utilizing stablecoins, Meta aims to streamline the payment process, eliminating intermediaries and their associated charges. Imagine a scenario where an Instagram creator in India can receive payments from their followers in the United States with minimal transaction fees. This is what Meta envisions with its stablecoin integration. By enabling direct peer-to-peer transactions, Meta can empower creators and businesses to retain a larger portion of their earnings. This in turn can foster a more inclusive and equitable digital economy. The use of stablecoins for cross-border payments can also significantly reduce transaction times. Traditional bank transfers can take several days to process, especially for international payments. Stablecoin transactions, on the other hand, can be completed in minutes, providing near instantaneous settlement. This speed and efficiency can be particularly beneficial for businesses that require quick access to funds. Meta's foray into the stablecoin realm is being spearheaded by Ginger Baker, the company's VP of Product. Baker brings with her a wealth of experience in fintech and payments, having previously worked at Plaid and served on the board of the Stellar Development Foundation. Her expertise in these areas makes her well-positioned to lead Meta's stablecoin initiative. On the other side of the table, Matt Cavan, a recent addition to Circle from Immutable, is leading discussions with Meta and other tech giants. Cavan's focus on Tier 1 strategic partnerships underscores Circle's eagerness to collaborate with major players like Meta to expand the adoption of stablecoins. These discussions highlight the growing convergence between traditional tech companies and the cryptocurrency industry. Meta's decision to explore stablecoins is not in isolation. The company's renewed interest coincides with a surge in activity within the stablecoin space. Recent developments, including Trump's election, Stripe's acquisition of Bridge, and Visa's partnership with Bridge, have injected fresh momentum into the industry. These events, coupled with ongoing congressional debates on stablecoin regulation, indicate a growing mainstream acceptance of stablecoins as a viable payment method. Mark Zuckerberg, CEO of Meta, has acknowledged the failure of Diem, but remains optimistic about the potential of blockchain technology. Speaking at a Stripe conference, Zuckerberg famously quipped, "That thing's dead," referring to Diem. However, he emphasized Meta's commitment to exploring emerging technologies, stating that the company would rather be early than late to the party. Zuckerberg's comments reflect a broader shift in the tech industry's perception of cryptocurrencies and blockchain technology. While initial skepticism was prevalent, the industry is now recognizing the transformative potential of these technologies. Meta's renewed interest in stablecoins is a testament to this evolving perspective. Meta's exploration of stablecoins signifies a strategic move to position itself at the forefront of the evolving digital payments landscape. By leveraging the efficiency and cost-effectiveness of stablecoins, the company aims to empower its users with seamless and affordable cross-border payment options. While the path ahead may present challenges, Meta's commitment to innovation and its willingness to learn from past experiences suggests that the company is well equipped to navigate the complexities of the stablecoin realm. Friends, remember back in 2021 when Trump called Bitcoin a scam? Pepperidge Farm remembers? Well, it seems the former president has had a change of heart, or should I say, a change of wallet. Because Donald J. Trump is now knee-deep in the world of cryptocurrency, and let's just say business is booming. Gone are the days of fake news and rigged elections. Trump's new rallying cry seems to be Dollar Trump to the moon. Yes, you heard that right. The man who once tweeted incessantly about building walls is now building a crypto empire, and it's apparently more lucrative than selling steaks and overpriced hats. Who needs to make America great again when you can make yourself a crypto billionaire? Because that's exactly what Trump is on track to do, according to reports. His family has reportedly raked in close to $1 billion from their various crypto ventures. That's more than he ever made pretending to be a successful businessman on reality TV. So, what exactly does Trump's crypto portfolio look like? Well, it's about as subtle and nuanced as a Trump rally, which is to say, not at all. First, we have the dollar Trump meme coin, because of course he has his own meme coin. Then there are the Trump digital trading cards, those glorious NFTs that feature Trump as a superhero, an astronaut, and other equally believable personas. But wait, there's more. Trump is also involved in a company called World Liberty Financial. Details are scarce, but it's safe to assume it involves some combination of the words freedom, patriot, and investment opportunity of a lifetime. And let's not forget about his Bitcoin mining operation, because apparently, destroying the environment is a bipartisan effort. Now you might be thinking, John, how does a man who struggles to use Twitter manage to navigate the complex world of cryptocurrency? Well, the answer is simple. He doesn't. Trump has surrounded himself with a team of crypto-savvy individuals who handle the technical stuff. His job is simply to slap his name on everything and yell about it on Truth Social. And yell he does. Trump has been aggressively promoting his crypto ventures, particularly the dollar Trump meme coin, to his loyal followers. He's even hosting a dollar Trump gala dinner at one of his golf courses, because of course he is. Tickets to this exclusive event? A hefty sum of dollar Trump tokens, naturally. This, my friends, is genius marketing. Trump understands that his base is incredibly susceptible to FOMO, especially when it comes to anything that promises to own the libs and make them rich in the process. He's essentially created his own economy, one where his face is the currency and his word is gospel. Now, I'm not a financial advisor, but I'm pretty sure investing in a meme coin based solely on the whims of a former reality TV star is not exactly a sound financial strategy. But then again, I never thought a man who bankrupted a casino could become president of the United States. So, what do I know? So, what does the future hold for Trump's crypto empire? Who knows? Maybe dollar Trump will become the new global reserve currency. Maybe we'll all be using Trump digital trading cards to buy groceries. Or maybe, just maybe, it will all come crashing down like a poorly constructed casino. One thing's for sure, Trump's foray into cryptocurrency is a fascinating case study in the power of branding, the allure of get-rich-quick schemes, and the enduring appeal of a certain brand of populist demagoguery. Whether you're a crypto enthusiast or a concerned citizen, there's no denying that Trump's crypto adventures are a wild ride. Buckle up, folks, it's going to be a bumpy one.